Good morning, everybody. It's Chris here from Serene Education with the 4 majors and its update for the 20th of August 2013. Okay, so let's have a look at the 4 majors, starting with the euro against US dollar using the FX8 Ultimate template. You'll notice that price recently has attempted the current highs here. I mentioned it yesterday at 1341.90. However, you can quite clearly see that price has failed to get above that, and the longer she finds a resistance here, the more likely his price is going to start changing its sentiment from one of positiveness to one of negativity. And you can see that we've had consecutive days now where we've had a lot of indecision, spinning tops, not a good sign. Indecisiveness, that's a clear indication of these candlesticks. Very little body and a lot of wick, and that's wick represents a lot of intraday movements, the buy and sellers competing with each other. However, the body candle close indicates to us primarily that they are indecisive or undecisive on the direction, and that indecision is coming now clearly at a major resistance level. And the more we see this indecision, the more likely there's going to be a potential for a negative stance to occur. So the longer she finds resistance here, the more likelihood his price is going to revert to the downside. Clearly here on the indicator box we're seeing a lot more positive, which is good. However, you can see the R squared is not really moving in favor of that. The R squared, we do need this requirement of here to be in the direction. So if we're seeing positiveness, then the R squared needs to be complementing that, because it's telling us that the sentiment is genuinely in that direction. And if we're going up, this is going to be blue, and it's clearly not. And the reason for that is primarily because we have a resistance level. So in this case, the euro, we do need to see a break higher than this level, and we do need to see it as soon as possible. The longer it takes for price to get above here, the more likelihood is there's going to be negative sentiment in it. There's going to be a lot more sellers coming into market. People are going to just walk away from this and look for something else to trade. And that's the risk at the moment now of looking to actually go long on euro against US dollar. Ideally here, I'm not trading this particular pair because I'm looking, because if this is to be a genuine positiveness, I want to see a break above this to concur that there's genuine sentiment behind it. And once we have genuine sentiment behind it, it's going to break these levels to the high side. And if we can get that, then we can start looking at the 50% retracement here on the weekly, which is good at 87 pips away, and then vice versa. You can see there's a lot of clean air above that because we haven't been above this level for quite some time. So you got to be patient in cases like this, because if you get a bearish engulfing candle closed lower, that's going to set up potential trades for the foreseeable future, i.e. back to these support lows that we've just come from. So patience is a virtue on this particular pair. We are seeing indecision. You don't trade indecision. We've got to wait for a decisive candle after indecision, and once we get a decision candle, then we'll look to trade it. Sterling, here again also, this one a lot far better than the euro, and you can see that we had a break last week, and now we're trading above the weekly fib here in the 50% region, which is great because that was a prior support and resistance level high. The great thing about it is we are finding support and moving higher. Before, we actually were above the institution moving average. You can quite clearly see here back in June of this year. We had the pullback, which was bound to happen on a breakout. Fantastic. But we wanted to see price actually finding support above this weekly high here, and that failed to materialize because we ended up having this bearish engulfing candle. The same happened here. Breakout. The pullback occurred, and that pullback above the weekly fib. But in this case, we saw the positive candle, the bullish engulfing candle that came on that price resistance level, which happens to be a new support, and we've seen price rally after that. So great. Above the next 50% retracement on the weekly now, we need to see a bullish engulfing candle. Price yesterday actually traded above the current high, but failed to close above it. Very, very important. If the daily bar yesterday closed higher, that would have definitely given me an indication I should be looking topside. It's still looking positive, don't get me wrong. It's just that we're seeing consolidation above this area now. We do need to see a kick on now. You'll notice that this particular buy here, we're seeing a lot more negativity intraday. The R squared hasn't really complemented it. So it's negative, but indecisive negativity. It's not genuine negativity. And I think as long as we maintain above the 50% retracement here, then we should still looking for higher highs. There we go. Overall, you can see that very strong upside trend we've seen recently over the past couple of months, and that's really bullish for the sterling against US dollar. However, if we want to see any buying opportunities, we would need to see price closing higher than this, and that would dictate that we should be looking to the 61.8 on our weekly, which happens to be the prior support and resistance level high above us, around that area being our next target. And from where we are seeing the resistance level to that level, there's a good 100 pips on there. Take away the spread, you're still walking away with 90 odd pips and change. The long-term sentiment still looking positive. Monthly, very much this is a cool indication that sterling is still looking negative on the monthly chart. You can see everything's red and we have the R squared complementing that negativity. Then we go down to our weekly, daily, and 4 hour. We're still looking for that positive upside, which you can clearly see. However, that intraday sentiment is one of negativity at the moment now. And if we go down to our 4 hour charts, you can see that price hasn't really moved on after breaking this weekly support and resistance level. So very imperative, very small trading ranges, indecisive candles. We don't trade indecision, we trade decisiveness. Got to see a bullish engulfing candle break higher than this. That'll be a great entry with a stop below that, and then we can target that 61.8 to the upside. US dollar Swiss franc. Here again, very consolidated. We saw a lot of sell-off for the US dollar against Swiss franc, and subsequent what we're seeing now is price hovering around this major support and resistance level on the weekly. Notice we've been here in the past. We have seen price breaking lower. However, that sentiment that takes price even lower. So we had the breakout here. The pullback candle failed to rally or close below price, and then the continuation lower. It actually engulfed. So this was a tweezer bottom on support, and sure enough, price rose. Here again, we had a breakout, the pullback, but we didn't get any follow through, the continuation. We just got a lot of indecision candles, and then when we did get a confirmation candle, it was higher, broke back up again, then the pullback, and then the continuation in the opposite direction. So here, very, very important, the breakout. Then we wanted to see a more bearish engulfing candle. That never proceeded because we end up having all these indecision candles. And that was hesitation at the underside of the breakout, and then subsequently price moved higher. Same happening over here, guys. Breakout, but no true breakout volume. And we see the pullback, and now around this area here, we want to see the breakouts, the pullback, and then the continuation lower. It just broke higher again, but it hasn't moved higher with a lot of sentiment. And what happened was we had this bearish engulfing candle. So overall, the sentiment is still one of negativity because it's not making higher highs. Notice this high over here is still lower than that, still lower than that, still lower than that, still lower than that. So you can see that price, even though it's hugging this one over here and we've seen a bounce, it's not a bounce with a lot of genuine sentiment because price hasn't really moved on. And the institution moving average has really kept that price bounce. So as long as that's happening, yesterday's bearish engulfing candle has now formed a lower swing, and that's under the weekly fib here. So still look a lot of negativity on the chart here. So the stance is one of consolidation, but negative consolidation. And if this is to be genuine negativity, we want to see a break of this consolidation area. So here again, another pair that I'm not really trading at the moment because we are in this consolidation range at a major support and resistance level in the shape of the weekly fib. I don't want to be speculating. Rather, everything is still negative over here. You can quite clearly see I have a red arrow. Candlesticks is still red. But I need a bearish engulfing candle close lower than this consolidative range. Get away from this consolidation, this hesitational area here, and I can trade cleaner air to the downside. And I know if I get a nice bearish engulfing candle closed lower, I can still eat or make profits of roughly 300 pips to the downside because there's less irritation and there's less consolidation in the air around this area, and there's more cleaner air. There's nothing to impede price from dropping. So wait patiently here. It's going to be either one or two things. For this to be really positive long term, we need to get above the institution. Price has failed miserably on a number of occasions to get above it. So the negativity is still there. We do need to see price breaking lower though. A nice bearish engulfing candle close low in this range over here. That will then allow me to see that price is still looking negative long term, and I can tap into that long term because I know where my initial target is likely to be. US dollar Japanese yen, same here. We've seen a long positive move for the US dollar over a number of months, right since September of last year. However, recently that's not been the case. We've had a breakout and then a pullback, and then we expected the bounce to occur in this region around June this year, but that failed to materialize and price broke lower. And you'll notice that over the past couple of weeks in particular, price hasn't been making any higher highs anymore. And once you start seeing no highs, that means you're seeing more lower lows. And if you're seeing lower lows, that means you're in a negative trend. And that's exactly what's happening now. It's consolidative. It's still above the institution but it's consolidative, and there's more negativity in play now. You can see that the actual chart shouts out more negativity than positiveness, and you can see we're trading below the monthly fib here, and we now attempting or reattesting the weekly fib that we've had or bounced on a number of occasions. And I mentioned about things making higher highs and lower lows. It's the simplest form of trading, guys. Always look at price. If price is positive, then she should be making higher highs. If she's negative, she must be making lower lows. And you can quite clearly see here, price hasn't been making higher highs recently. It's making more lower lows. Swing low, swing low, swing low, swing low. And we had an indecision candle, and you can see on the Asian session we're having a lot of selling. So this could be another swing low. Price hasn't closed yet because we've got to wait a full date for that. But as you can quite clearly see, recently this negativity has got a lot sharper, a lot more aggressive to the downside, and now we are reattempting. There's more likely for price. We're reattempting the weekly fib here for the second time in a number of days. So more negativity shouting, but the R squared isn't really complementing that negativity yet. The 50 and 30 minute, yes, and I think if we do see a break primarily, and I'm looking for a consolidation break below this current level here and get below the institution, because it'll be the first time, if we do see a break below that institution on the daily, it'll be the first time we've actually been trading below the daily since October of last year. So that would be a very negative signal, because since October we have been trading above it, so it's been very, very positive. You can see a massive move to the upside. Now we're getting, and we reattempted the institution just a number of days ago, and now we're back at this level, potentially back at this level quite soon. So the negativity is there. There's a lot more negativity in this. So if you're looking at the US dollar Japanese yen at the moment, you should be looking for that negativity. You shouldn't be looking for buying opportunities. There should be more negativity in frame here. And I think if we see price closing below the institution over here, that'll really bode negative for long-term sentiment, and then we should be looking ideally for price to head towards this monthly low over here, which happens to be the current low that we've seen of this year, or in June of this year. And if we get below that, then you can see a lot of selling. See, there's a lot cleaner air here to the downside, and that would show a lot of negativity to the downside. So at the moment now, prices, especially the four majors, are trading into major support and resistance levels. There's a lot of uncertainty out there, and we're waiting for that certainty. We're waiting for that decision count. We're waiting for that sentiment count that's going to tell us where price is trading. And once that happens, then we'll know for certain where we should be looking to trade, upside or downside, for the foreseeable future. And that's what you've got to do as a trader. You've got to be patient. The more patient you are, the less you're trading. But when you do get the trades going in your favor, you're more profitable, because you're only taking 1 or 2 trades, and they're going for extended periods of time. They're not in and out, in and out. They're not a very sporadic, very indecisive. They're more decisive, and that allows you to tap into trades for longer periods of time, therefore less risk attached to it, because there's genuine sentiment movement in that direction, and that's where you want to be trading. So there's not been a lot of trades around, so be patient. Once we get that indication where it's likely to go to, I guarantee you'll be a lot more profitable. So just hang in tight. If you are using this particular template, please back it up with sound money management rules. Very important. I'll keep referring to it, because you do have to have money management rules to complement the strategy that you're trading. And that goes for any trade strategy out there. Very, very important. Keep it simple. Major support and resistance levels. Look for breakouts. Look at candlesticks. Candlesticks will tell you everything you need to know. I've always worked on candlesticks. I've always believed that candlesticks is the number one thing, because most of the indicators that you're using out there to trade are based on previous data, or previous candlestick data, or sentiment, and that's going to be reflected in candlesticks. So if you have an understanding of how candlesticks work and how they actually complement each other around major support and resistance levels, will give you an insight into where price action is and where that sentiment lies. And if you know where the sentiment lies, that means you're going to be more profitable, or making better decisions going forward, and your outcome will be more profitable. So understand candlesticks in particular around major support and resistance levels. That's what I'm looking at the moment now, and I'm not really seeing any true direction. So if you are interested in this particular template, please drop us an email at info@sereneeducation.com. The email address will be at the end of this video. Otherwise, I'm going to leave you to it. Hope you have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.